All right. Today's SPY was down 0.16% today, and it was a range trading day, so we did not get the break through the top of this range at 556. And the bottom of the range is still down here at 548. So it will be important which direction from this range that price breaks. And remember, we do not care which direction it breaks. We simply want to follow price. So while we're getting this rejection from 556, you need to be open to the idea we could push to the bottom of the range and test it yet again at 548. However, on SPY, we are still above a rising 20 daily moving average, and we did close above it today. So there is also going to be support right around 553. So going into tomorrow, I think if we break 553, that could be a sign we're going near the bottom of the range at 548. And then if we break through 556, I think the bulls are on parade all the way up to 562. And then if the bulls continue to push higher, we will likely make a brand new all-time high just below 570. So I think 556 is a very critical resistance. If we break through that, it's going to be looking very bullish. And then of course, 548 is a very critical support, because if we break down below 548, this will start looking like we have lower highs and lower lows, and we're breaking through a critical support, which means we will at least get this critical test of the rising 50 EMA. And then if we break through that, it does look like we will be going through a deep pullback or a full correction. So you have all of these very clear levels. Nobody knows exactly where the market is going, but because it is a bull market with a bull trend, the odds still do favor the bulls will push higher. And the only thing that will push the odds in the favor of the bears is that if price breaks through critical support and starts showing some lower highs and lower lows. Remember, the trend is your friend, and right now we do not have lower highs and lower lows. We still have the potential of this being a higher low before the next higher high. On the NASDAQ 100 triple Qs, we were down 0.35% today, and the triple Qs look a little bit weaker than SPY because they are not above the rising 20 daily moving average, and we did get rejected below a negative daily 5 EMA yet again. However, we did not break the support at 480. So in the triple Qs, I would view the range between 473.8 and the top of this range right around 483. And there is still the chance the bears do push us lower to fill this gap at 468. So if we start breaking down below 480, be open to the idea that we could break to another low and hit the full gap close at 468. If the bulls continue to push higher and we get through 483, then we will likely push higher towards 491 and a gap fill above 493. And if we push through that, I'm looking for a brand new all-time high at 507 and 511. So there's very clear risk levels here, whether you're shorting or going long. But just remember, if you are shorting and we break through these resistance levels above, it is a bull market, so it's very risky to continue to hold those short positions. You're much better off looking to get those low risk entries at support in a bull market. On the Dow Jones, we were down 0.16% today, and the Dow Jones still has the potential to pull back a little bit more between 398 and 402. But longer term, I think this is always a buy the dip above 398, because I do believe we're well on our way towards 415 and then 420. And as you can tell from this chart, this is a very powerful bull trend that just got a little too far overextended, and it's cooling down during a pullback. And then after this pullback, I do expect to see the Dow Jones continuing to make a brand new all-time high. On the Russell 2000 IWM ETF, we were up 1.06% today, so we still see the small caps doing the best as far as performance goes, which is a relative outperformance because they're still not doing better year to date. But as you can see, this arrow is working very well from the gap fill right around 218 to a push higher towards the price target at 228. The next resistance breakout for the bulls will be above 223 and 226. If at any point we get a rejection from a lower high and we come down here and break below 216, it is possible we fill a gap at 211. On the ARKK ETF, we were up 0.21% today, and another day of closing back above all the moving averages with a bull trend. So as long as we're above 47, there's still a very good chance we're pushing higher towards 50.7. This goes hand in hand with the IWM analysis that small cap growth is doing very well, and it's starting to look a lot more risk on. So while I don't necessarily think you need to be trading this ETF, it is definitely looking like it is a great risk on sentiment indicator, which means that we could continue to see risk on behavior in small cap growth. On the VIX, we were down 1.28% today, and I still think the VIX is going to crush down here towards 13 as we continue to see this bull trend bouncing off critical support. But if at any point we lose critical support, it is possible to see some panic, and in that event, we'll expect to see the VIX spiking up here above 18. On Bitcoin, we are currently trading just below 66,000, and we are down below the daily 5 EMA. SMA. So as we're pulling back, the critical risk level now is 65,000. So to make this very clear, I'm just going to move this support level up. And as long as we can hold above 65,000, it is possible this is just a retest of the breakout before we continue into the 70,000s. If we break below 65,000, I think it's completely fine to get risk off and look for a push lower down towards 62 to 63,000. On Nvidia stock, we were down 0.77% today, and we did fully close that gap today above 124, which was a very good chance that did happen today. But now that that gap is filled, we are going to need to see if the bulls have what it takes to push through this resistance above between 126 and 127, or if the bears are just getting another lower high before this next lower low push down towards 115, and below 115 it looks risk off for 109 and a gap fill below 107. So you could continue to stay bullish above 115, but if we break down below it, be aware we could be going down towards 107 to 109. If we can break through 126 to 127, we will likely make a brand new all-time high, or at least push to the top of the range right between 135 and 140. On Tesla stock, we were down 2.04% today, and Tesla is having earnings after the bell. So after earnings, it's always going to be a coin flip. The risk level I suggest to be bearish or bullish is right here at 244. Below 244, I will be looking for a gap fill right around 231 and a very strong support right around 230. If that support fails, then we come back down to fill another gap at 213. If we can hold above 244, or if we start to bounce off of 230 and break back above 244, then we're looking for the higher price target above here at 289, or at least a push to the top of the range right around 264. On Apple stock, we were up 0.47% today, and I still think this is buy the dip above 218 and also buy the dip above the rising 20 daily moving average right around 223. And I do think we'll hit this price target at 232 and likely even make a brand new all-time high in the 240s. Now, we do have earnings coming up early in August, so we will likely see that being the catalyst. So it is possible we just continue to chop around within this range until we get closer to that earnings report. But no matter what happens, as long as we can hold above 218, I think it's better to stay bullish in Apple right now. So jumping back over to the S&P 500, this is definitely a very critical range that we're in. And the decision of whether we continue this bull trend or roll over and lose critical support is going to be decided by the price action. I still think the highest probability chance in this bull trend is that we just got to pull back to a higher low before we continue higher. But as always, we'll let the price action do all the talking and be prepared for both scenarios. My preferred plan is to continue to stay bullish while the chart allows for it, and then react accordingly if we break through support and continue to manage risk, and then adapt to the chart as more price action begins to unfold. Remember, your job as a trader is not necessarily to predict where the market is going. Your job is to take the highest probability chance with the best risk reward setups, and you need to decide in your trade plan where your risk is and where your reward is, and weigh the risk to the reward. And if the reward is not larger than the risk, you simply do not take that trade and try to continue to take the trades with the best probability, which is going to be in the direction of the trend. If you are by nature a bear, go find stocks that are trending lower and try to short those at resistance. And if you are a bull, go find stocks that are trending higher and try to buy them near support levels. Continue to get in the habit of getting those high probability entries with the low risk, high reward, and then just continue to rinse and repeat and do that cycle over and over, and always move like water. Don't marry any ideas, don't get sold on any bias, let the chart do all the talking, and if the chart changes what it looks like and it starts to do something different, move like water and act accordingly. We're not in this business to be right or wrong, we're in this business to make money, and in order to make money, you will need to manage your risk and continue to take high quality trade setups. If you want my trade ideas, those are in my Discord server, and you will also get access to all of my intraday updates and my technical analysis. You can find out how to join my Discord server by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.